Hello and welcome to this week's episode for Spy Trader Now. I am your host. My name is Ken, and our model portfolio is up 11.52% year to date. Our stock market strength color signal is green, and we try to beat the returns of the S&P 500 buy and hold investor. Their portfolio is up 15.5% year to date. Last week, the S&P 500 lost 1.96%, and you can see the candle really well here in the thumbnail. And this is what's called a bearish engulfing candle, telling you that there's an overwhelming amount of bearishness on last week's trading compared to the previous week. Also, you can see here in this weekly chart how you have a negative divergence from the MACD here to the price action here. And the MACD has topped and it is wanting to come down and possibly cross below its signal line. When it crosses below its signal line, that's when the market starts drifting down. So it happened here, and it may or may not happen here. We'll see if this bearishness continues, if it'll be just a small little pullback or something more significant like these. Last week, we made no trades. Here are the trades we've made so far in 2024. If you want to see all my trades going back 3 years, you can head over to this link. It will be down in the description down below. Now we have 3 open positions. I currently hold 200 shares of SPY. We're very profitable by $12,248 or 12% in those 200 shares. In addition to that, I have an in-the-money covered call. So when the stock market goes down, my in-the-money covered call will become more profitable to me. So currently we're upside down in that position by $1,600, but we're not going to take that loss because we have an expectation to either close out of it profitably or wait till it expires on 10/18/2024, which is at the end of the summer doldrums. That's why that timing comes into play there. In addition to that, we have one put. Our put is currently underwater by $256. But we're going out a decent time frame here of 6/20/2025. So we've got plenty of time to allow this put to work to see if this market softens up some more and we get this profitable. If you want to see how I manage this portfolio throughout the year, go ahead, hit that like button, subscribe to my channel, and ring that bell. Now, here is the equity curves of our model portfolio in blue and the S&P 500 buy and hold investor in pink. Our goal before the end of the calendar year is for our portfolio to be more profitable than the S&P 500's portfolio. In addition to that, we'd like to have a little bit more of a smoother equity curve with not so much gyrations. So far, we're accomplishing that smoothness of the equity curve compared to the gyrations of the buy and hold investor. But the more important goal is for our portfolio to be more profitable than the buy and hold investor, and we're not accomplishing that goal. So until we do that, I don't feel 100% comfortable because right now the buy and hold investor is going to be the portfolio that you'd want to have because you're going to be more profitable than my portfolio, than our model portfolio, I should say. Now we are looking at the short-term outlook. This is a daily 6-month chart. We have some cycle brackets going on in here, and we're trying to show you what is happening, and you can see the candlesticks really well when it's blown up like this. Now, one thing that I want to bring up is how we've got these cycle brackets, which are located here. And this cycle low corresponds with this low, this cycle low corresponds with this low. So then when you take these lows here, and if you were to draw a line across them like that, this line here could be considered a valid trend line. And we broke that over the last 2 days of trading. We are now trading below what's called this valid trend line, taking this daily cycle low to this cycle low here. So we want to keep track of what's happening here. And now that we're below this valid trend line, it's more bearish activity. Now, if you look at the timing of where we are at in this cycle, we're just about at the halfway point. Oh, and another thing I want to point out, look how the volume has increased over the last 3 days. Last 3 days, all negative. So you have increased volume and you have negative activity, telling you that there's money being put into bearishness in this market, and there's volume behind it. Now, on the timing, we're right at about the halfway point of this cycle bracket that goes here. And as we get closer towards the end here, there's going to be these pullbacks, which are normal, that happened at the end of these cycles. So we're at the halfway point here. What I'm kind of expecting is something like this. I'm expecting a bounce, come up a little bit, and then come down and possibly take out this low right here. If we take out not that low, I'm sorry, this low here. If we take out this low here, then that would be a confirmation that now we have this cycle here will have a negative configuration. It is a cycle breakdown compared to this cycle, which had a positive cycle. So from this low to this low, from this low to that low, we closed the end of the cycle higher than when we opened the cycle. But if this has a cycle breakdown on this cycle, then this particular cycle here will have a cycle breakdown, and that is going to be very negative for the market. Now we are looking at a ratio chart of the NASDAQ 100 compared to the S&P 500. And so it's basically a risk on, risk off chart. Now, what we're trying to focus on here is we're trying to focus on this red and black line. It's red when it goes down, it's black when it goes up. We reached this point here, which was kind of like a peak, and then you can see how it just completely fell off of a cliff. This is where we stand right now. But you'll notice that here on the slow stochastics, how we are in oversold territory. We're below 20. This is probably going to come up and come up this way. And this, in addition to that, this is going to come up. Possibly this line here is going to come up, tag this line before it starts coming back down. So I would kind of expect some type of activity like that to happen over the next couple of weeks. Now we are looking at the VIX volatility or fear index. There are 3 lines. Below this green line here, we are in the ultra low range, which is very bullish. Between these 2 green lines here, it's still bullish, but it's not the ultra low range, it's just the low range. And then up here is the upper range. Now where we stand right now, which is right here at 16.52, we are in the low range. Now this day's activity, which is Friday's action from this low here to that high there, I don't quite believe that that's actually true information, because there was a glitch with crowdsourced software. So I kind of got a feeling that that candle may not be totally accurate. If it is accurate, that candle is a completely crazy candle. You've never seen anything like that in the 1 year on this chart. That's a very unusual candle. But even if you take the craziness of this candle out of consideration, one thing that is absolutely positive is that you can see that we started here and we are going in this direction. We're going up. What happens when you go up the stock market, which is the S&P 500 in this blue line right here? Well, that goes down. And there's a support line that I've got written in here, this line right here. Well, we haven't broken it yet, but if we start to break that and this starts to come down, well, that is going to be further evidence that the S&P 500 is losing its support and more bearish activity is afoot. Now, the fact that we're here and we were in the ultra low range and now we are in the low range is telling you that fear is definitely increasing in this market. you can see here on the MACD how it is completely going north. Now, we are in an oversold condition when it comes to the slow stochastics. So here you reached a peak, here you reached a peak, and when you follow that up, looking at the blue S&P 500, when you've reached a peak here, well, you're going to get a short-term bounce coming up there. On this one, when you reach the peak here, get a bounce coming up here. So I wouldn't be surprised if we get a bounce right now before we start doing something else. It's a little unclear. We haven't seen the bounce yet, but I would not be surprised to see a bounce come up out of the S&P 500 right now. Okay, so now we're looking at seasonality of the S&P 500 going back 5 years, and also, so here's 5 years and going back 10 years. You can see those numbers right here. For the month of July, highlighted 100% probability that you are going to close higher than you opened. Well, where are we at for the month? Well, for the current month of July, these are monthly candlesticks, you're up 0.88%. So compared to where we were going, we've really come down, but we're still positive. But there's only a week and a half left of trading as of July 19th, 2024. So we have strong probabilities that we are not going to go lower than 0.88% lower than our current price and close the month out in the next week and a half, telling me that there's more probabilities that this candle is going to go up a little bit before it starts going down. These are just probabilities. Nothing is a guarantee, but 100% probabilities going back 5 years and going back 10 years is pretty good statistics to telling you you're really not going to go any lower for this month than where you're at right now. You might come down, but then before the end of the month, the next week and a half, then you'll come right back up and be pretty much exactly where you're at. Now, if the market does move sideways, because I have an in-the-money covered call, that means I sold premium. So as time goes by, I'm still going to collect that premium due to time decay. So that's a good thing for me holding an in-the-money covered call. Okay, now we are looking at a 3-year weekly chart for symbol SPY. And we have standard deviations on this chart. This is the +2, -2 in gold, +1, -1 in pink. We have our cycle brackets here. You can see that this low represents that low. This low represents that low. This low has yet to be determined yet because we don't have it yet, but it's coming around the corner here. Now, when you normally hit the +2 standard deviation, there's a 96% probability that you're not going to go and start trading above this. So right now you can see that I also have a Fibonacci extension here, and you can see the percentages here, 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 and here. And we came up to just about the 61.8 before we got this rejection candle. This red, this is my target zone right here. We hit the middle of the target zone, it would be completely normal and natural for this thing to start pulling back. We have a valid trend line here drawn from this cycle low here and this cycle low here, straight line going across. Once we start breaking this valid trend line, that will be more bearish. But we're still on the north side of this valid trend line, indicating that we are still in bull mode. It's just one bearish candle. And now let's see where we stand according to this cycle. On this cycle, we are right there. So technically, this is the beginning of this next cycle over here. And we're only just one candle, couple candles into this new cycle. So if that is true, and if this starts to break down, that would be a left-hand translation on this cycle here. And if that were to happen, that would be not exactly good. But right now, we're kind of in bullish mode on this. Let's switch over to the daily. We're going to go to a 1-year daily and change our cycle brackets to 1 year daily, and let's see what's going on here. Now here you've got a little bit going on where I did a Fibonacci extension here. You can see the numbers here. We just about hit the 78.6. We're rejected, and now we're falling back. And on the daily, we are below this valid trend line. Just started trading below it on Thursday and Friday of last week. We're here in the cycle. And once you start getting here into the cycle, late into the cycle, that's more bearish. But if you start getting, if we cross below, I'll show you the line right here. If we cross below this low right here, that means that this cycle low is going to be a broken cycle. And I'm considering that cycle low to be there, that cycle low to be there. So these are just like the half cycles, or kind of like a minor cycle. These are potentially cycles here too that may have some validity, but for right now, this is what I'm calling the cycles. We're still trading above it. We do not have a cycle breakdown yet, but look how close we are. Technically, I am looking for a bounce. I'm thinking that we're going to get a bounce back up, tag this valid trend line, then come down, then break this. The time to put my short position on is after we come back to a test of the valid trend line, using the valid trend line, some additional put positions is what I'm saying, and using this valid trend line as my stop loss. So, but none of this has happened. I'm just preparing for what if scenarios here. Right now, this is where we stand on the daily chart. Now we're looking at a spreadsheet that I created in Excel just to get an idea of the strength of the market. Basically, the more green you see on the screen, the stronger the market is. Now, we had more green last week. Last week, across different asset classes, we were at 85. Today, we're at 70. Still a green signal. The 11 sectors of the S&P 500, last week 80, this week 76. So we have lost some, but clearly still a green signal. Now we're looking at a 1 year chart of the 10-year bond yields. Now the chart that we're trying to focus on here is the candlesticks. These are the candlesticks here. That is the chart of TNX, which is the 10-year bond yields. Now this black line, that represents TLT, which is 20-year bonds. This dark blue line, that is symbol SPY, representing the S&P 500. So you can see that there's a couple of lines here. This green line here represented some support along the line here, so that has a little bit of significance. This blue line here, you can see here, how it kind of respects this level of somewhere between just under 43.5. So right now, what happened? We dipped below this green line, but we've just shot up on it on Friday. And it kind of get the impression that we're in a trading range now. We're going from a low to a high to a low, possibly up here to a high, and then back down, bouncing. So we'll see how the market reacts. We know that the market did not like it from right about here. Let me just trash some of this so we can see it a little bit better. Right here is when the market started to decline, right there. Then you got a pop in yields. Oh, and look at the energy that you got down here. Slow stochastics, oversold condition, ready to pop up. Well, what's that going to do? That's going to give this more energy to pop up. So when that pops up, the TLT 20-year bonds, that's going to pop down, and the S&P 500 will also go down as you have rising bond yields. And that takes us to the conclusion of this video. Now comes the critical thinking. What are you going to do with that information? Well, as of July 20th, 2024, the market summation, according to me, Ken, your friendly host for SPY Trader Now, the market is decreasing in strength, but not by much, but definitely decreasing. And you know for sure fear is increasing. We saw that. We have a bearish engulfing candle, which by the way, I pulled this up off of Google. It is technically a bearish engulfing candle, what we are experiencing. I thought that the body had to envelop even the wick and tail of the candle, but technically it does not. The body of the bearish candle only has to engulf the body of the previous day's candle. So that would be the bearish engulfing candle as shown right here. Okay, which suggests we are expecting for more bearish activity in the short term. July has a very strong seasonality. Showed you guys that 5 in 10 years, 100% probability of being positive. And we are only up 0.88%, and there's only 1.5 weeks left to go in this month. I'm expecting some sideways to up action over the next 1 to 2 weeks. So we have nothing to do yet but watch to see if we are going to hold key levels and bounce, or if we start breaking the 542.27 on SPY, well then this market is heading south faster than I thought. So that's it. Stay tuned. I hope you got some valuable information out of this video. If you have not done so already, smash that like button down, subscribe to my channel, ring that bell to be notified when I post a video. I thank you and wish you good trading.